Hello everyone, welcome to my YouTube channel. Today I'm making you a special video. What we're gonna do today is to go through some examples of a very simple strategy. This strategy which was basically my first price action strategy and the first real strategy that actually worked for me with good results. I did change this strategy to adapt to my own personality and my own lifestyle. So it's not the current strategy I use. That the current strategy I use is a little bit different, but it's inspired by this strategy. Now, this strategy is perfect for beginners, mainly because it's very simple. You don't need to put heaps of indicators on and a stochastic and moving average, nothing like that. Personally, I do not like using any sort of indicator because whatever information the indicators give you is already within the price. And problem with indicators is that not only it shows you what is already there in the price, it also has a delayed reaction. So it's a backward looking and it can never give you more edge than you can get by just reading the price on the chart. Currently, the only indicator I have is this swing indicator, which you can get on TradingView. It's the swing high, low, support, resistance. Now, what this indicator does, it just highlights the highs and lows of every movement. You don't really need it. You can just tell by naked eyes, and I'm gonna run you through some example, but this helps to get a better visual. So it's not really an indicator, it's more like a visual aid, you could say. All right, so the bounces of support and resistance zones. This is a very simple strategy. I'm gonna run you through some examples and get you to familiarize yourself with the process. So what we need to do, we basically go to any pairs. I've got 28 pairs in. It works on any pairs because it is not dependent on whether price is in a trend or whether price is in a consolidation phase. Now the time frame I'm using here is daily, because daily time frame gives you the support and resistance zones which are much stronger than lower time frames. Because the higher time frame you go, the more people trade. Now, I don't go to weekly or monthly because that's too long. Not a lot of people trade. Most hedge funds and even most speculator traders reference daily at least, even though they trade on lower time frames. So the support and resistance zones you get on daily is respected more and it holds longer. And that's what we want. It gives us a better edge. All right, step one is to open a chart. So here we are, Euro USD daily, and what we're gonna do is zoom out a little bit and we look at where bounces are. So we want to see locations where price clearly changes direction at least twice. So if you come here, for example, look at this top, you see that price comes up here, gets rejected down, comes back up here again, gets rejected down again, and rejected down and reverses, right? So the way I draw the zone, there's no real specific way to draw these zones because it's only meant to help you to have a visual perspective of the levels. So you simply draw from highest week to the lowest week, and that would be your zone. So for example, in here, if you're waiting for the price to reach up there and we see a rejection down, we can mark this area. Second time comes up and we get a rejection down, that makes this level stronger. First time can just be a higher high. So as you can see on this uptrend, higher high breaks through, higher high breaks through, and breaks through, right? But up here, once the second time fails to make a new high, that would give you a confirmed level. That's what I called confirmed level. So the first rejection doesn't give you any new information. It can just be another high having a pullback. But the second rejection shows a lack of momentum in this uptrend. So this uptrend is strong momentum and then momentum disappears. Now, this doesn't mean price cannot go down and come back and break up. There is no such a thing. We are merely looking for an edge where the probability of moving in one direction is slightly, and I mean very slightly, greater than moving in the opposite. And this is the laws of probability. So if you take one trade with this method and you win, and then you take another trade and you lose, and the over two trades is 50-50. The aim of having an edge is that over a large number of trades, we have more right than wrong. So let's say we take 100 trades with this strategy, and with an edge, we aim to achieve at least something around 55% winners. And we say, oh, but that's only like 5% more. It's not gonna make me much profit. But here's the catch. When you have winners, you take big winners. When you have losers, you manage your risk to take smaller losers. So the idea here is edge plus risk management. So I'm just gonna go up and hypothetically draw this for you. So what happens when you have a zone? Let's say we have a zone up, we have a zone down, and these are the locations where price has bounced multiple times before. Price comes back up, make a pullback, goes up, comes back, goes up, down, and we don't really care about how the price is moving, right? We just want to make sure that price reaches here a second time and then moves down. So the idea is this is a confirmed zone, and once price falls down from it for a second time, that gives you an indication where this level is holding. All right, so the idea is that once a price confirms a level, so we're looking at a level that's tested at least twice, and a third time, we can expect a bounce. Now, it doesn't always mean it's gonna bounce. It just gives us slightly more edge. We're talking about maybe 55% chance of bounce, 45% chance of break. Now, with this edge over the long number of trades, we can have higher winners than losers. So similarly here, let's say price first comes up here and then confirms this level, and the second time comes up, shows signs of rejection and goes down. So our first step is to draw these zones. So we draw these zones where multiple times rejections has occurred. So in this case, for example, once the price moves down from here, you can draw a zone, and the second time price did not move down. So this level is not confirmed. That's why this wouldn't be a place where you sell. Right, for a bounce. On the other hand, we have this level down here. You can see that the price has moved up from this level one time, comes back, moves up second time, and then a third time comes back and closes bullish. So step 2 is after the 2 times confirmation of the zone, you wait for a third time to reach the zone and shows signs of rejection. Now, signs of rejection can come in many different forms. One of the forms is a wick. When a wick is placed, that shows, so when the bears are pushing down and they get a wick at this level, it shows that bulls are stepping in. When the candle closes bullish above the previous day, that shows bulls in that day have had higher momentum and higher power than the bears. So this is one sign of rejection. Another sign is a quick reversal up with the long wicks. Wicks are always very good. Example, sometimes you don't get wick. For example, candle can close extremely bullish in that zone, and then next day bears dominate down without any wick. That's also another sign. You can call this engulfing candle. So in this case, bearish engulfing candle, where current candle or this candle, this bear candle engulfs and overtakes the previous bull candle. But we don't really care about names. We just want to see signs of rejection. So that's the step 2. Let's say in this case, we have this bullish close. So we see signs of rejection at this level. Now, once you have this sign, we want to place our trades. So we enter a buy at the open of new candle, stop loss just below this zone. One rule for placing stop loss is it needs to be located where your idea is no longer valid if the price reaches that level. So I'm not going to place a stop loss within the zone, because if the price comes back again, this zone is still holding, it can go up. So the idea of bounce is still valid. But if the price falls below this zone and closes below this zone, then the idea of bounce from this is no longer valid. Doesn't mean it cannot come out and create a fake move and then go back in. No, it can't. Price can do anything, right? But this is a form of risk management, and we want to manage risk where our idea fails to come true, basically. So enter here, stop loss below the zone. Now, how thick you draw these zones is up to you. I usually go from end of the longest wick or longest candle to at least cover other wicks as well. Basically, the wider this zone is, the wider your stop loss has to be. That's something to consider. Now, take profit for this method, we can just simply go 1-to-1. The idea is that we have an edge. So ideally, we would have more winners than losers. So even with 1-to-1 risk reward, we get more winners and we make profit. You can also extend this to 1.5. You can do it 1-to-2, depending on you. But the higher take profit you set, the more losers you're gonna have, because there's no guarantee that price will reach your TP before it's pulling back and stopping out. That's another thing to consider. It's just that simple. So you let it run, and then till it hits take profit or it hits your stop loss. All right, that's one way to. Another way to do it is to manage it live. What that means, for instance, let's say I enter after this bullish rejection, I enter here. Stop loss behind, profit here. Now what happens? Price comes through, right? Pulls back, and let's say I'm not looking at this. I'm not looking at this candle. I'm looking at this bullish close, right? And I started to think maybe it's bouncing here, right? So one thing you can do, you can put your stop loss to break even and then let it run. That way you have zero risk of losing money. That's another method of risk management. So this is more active method of risk management. This is more passive, where you set your stop loss and you let whatever happens, happens. Each one has its own advantages and disadvantages, which we'll discuss later. You can also apply this support and resistance zone strategy to trending phase. So simply, when price is trending, we look at areas of pullback to previous zones. So for example, we have the rejection of this zone previously, one time, twice, and 3 times. So the next time price pulls back, shows a rejection, and the next candle goes bullish. This shows the bulls stepping into market and taking over the bears on this level. And that doesn't mean next one is going to be up. It can also just fall through, but we have an edge, and that's what it counts. So on an uptrend, look for a levels that has established itself through rejections, and then wait for a confirmation and then buy. So we place entry here, stop loss below, take profit. As I said, for now, I just show you 1-to-1, and then you can configure that to your own desires through backtesting. Remember, any strategy you take, you always need to backtest it, because about 70% of a strategy is psychology. If it doesn't match your psychology, if you can't be patient enough to see it through, you won't succeed in it, even though other people's are showing success in it. So strategy on its own doesn't work. It's also very dependent on nature of the person who's trading. So you take the information, write down the rules, go do some back testing, and then you can find out whether it's suitable for you or not. Yeah, you can also alter that to match your own desires, to match your own patience level, match your own take profit. Personally, I like when I can take profit fast. So if I do 1-to-1 here, I can take profit in 3 days. If I do 1-to-2, I have to wait for 1, 2, 3, 4, 5, 6, at least 2 weeks before I can get a 1-to-2 take profit. And during that time, I have once and twice price pulling back against me. Personally, that doesn't suit my character, as I'm not that patient, and I don't like watching price coming back against me. That's why I stick to 1-to-1. But you can adapt that to your own characteristics. And we have another level here as well. Now, obviously I see where the price going afterwards, so this is in hindsight, but we're gonna do back testing and we'll see the actual strategy. This is just for educational purposes for now. So here you can see a rejection off of this level, second rejection, a break, and the back in. So this is a fake out, comes back in. So this is a third move down. So this is confirmed, yes. And then price takes off, comes back. We get a quick reversal, right? This quick reversal basically bears, push all the way through, fail to break, and bulls take over. Now that's a confirmation and a rejection. So this level is already confirmed and we get a rejection off of this level, and then we can enter here, stop loss below, take profit 1-to-1. Very simple. Not saying you're gonna win every time. All right, so this is how you can also enter during a trend formation. A couple of more examples just to give you better ideas. Down here, for instance, first time price bounce, second time came and bounced. That would confirm this as a strong resistance zone. Third time price smashes down, leaves a wick, next candle closes bullish, shows a change in behavior. Bulls taking over in this day, previous day bears were overwhelmed. So we simply enter at the new day candle, stop loss below, and 1-to-1 take profit. I'm also gonna show you some example of this strategy failing, because in hindsight, obviously we can see where the good entries are, where the winning entries are. But you also need to consider that this strategy merely provides you with a winning edge. That doesn't mean you will win every time, or even you will win most of the time. No, it gives you slides, more winners over your losers. So first thing you need to learn as a trader is to accept your losers. It's a business cost. Trading is a business and you need to have expenses to earn revenue. As long as your revenue is more than your expenses, then you're in profit, and that's a good business. So this is an example of trade failing. So price comes up, bounces down, comes up, bounces out. So the third time comes up, does a rejection. You can see the wick rejected, next paused, right? Now here you can say the bulls are failing to break through. So if you make that decision and enter on this candle, stop loss above and 1-to-1, then you would have a loser almost immediately. So this is one of the examples of a losing position. Similarly here, it's another losing position. So price comes up, wicks out, shows extreme rejection, comes back up, wicks down, extreme rejection, comes back up, and then shows sign of bearish momentum here. So you could say, it wicks down, it failed, it's gonna go through, and if you enter here, stop loss above, and then you would lose this trade. Alternatively, you can have a different opinion. You can say, okay, this is already broken above this zone, price is coming back, failing. So if you're patient enough to go to the next day, you see a bullish close. So you see price is failing to break below this zone, which means this is a breakout, retest, and a bounce. So you could be buying here. That's why people with the same strategy, they can have different winning rates, because depending on your perspective, the result can change. See, on the same example, you can have a winning trade, and depending on what candle you look at and where you're making your decision and what you're making your decision based on, you can have a losing trade. And this part of it, this judgment comes with the experience. There is nothing that can replace the chart hour you need to put in to have a visual understanding of how price moves. Intuition is 80% of trading. 10% is strategy and 10% is risk management. All right, I think we've done enough examples. Now let's do some backtesting. All right, so just to keep this fair, we're gonna choose a random number out of the 28 pairs. 17. Let's go to per 17. 1, 2, 3, 4, 15, 16, 17. AUD, USD. Go to the recent time on a daily. All right, so what we're gonna do is pick a random date, maybe further back so I don't see the candles on the chart. Okay, this is good. 29, 2010. Go here and go to our dates. Reply to got that there. All right, so we want to draw some zones. So where the price is, we draw zones above, we draw zones below. Now, interesting enough, this is come back for a second confirmation. So this zone is confirmed. That is not yet confirmed. If you extend that to the left, you might consider this as part of this zone. But for now, we leave it as is. One zone above, one zone below the current price. Price comes back and gets a rejection. So it comes back to this zone for a third time, right? Once rejected, second rejected, third time rejected. It hasn't really moved up. So this is really up to you, because right now you can consider this in a consolidation. You could say there's also a zone above here where you can't break. So we can simply wait for the price to break out of this, go to a different zone. So here in this zone, so price moves out. This area is confirmed now. It's a strong zone. This area is confirmed now as a strong zone. It broke below, but then break back up. Now you could consider this breakout retest for a bounce down, or you could consider this breakout break back in like a fake out and then trying to go up. And the overall movement is up, so I say we have an edge towards up. So we enter here next candle, stop loss below 121. And let's see what happens. Okay, so this is a winner. So that simply came down, faked out, and bounced, right? That's it, second bounce. So this zone is no longer valid because recent price action is the most important. And recent price action is telling us it's bounced from this location twice. And this is the second time it's broken through this zone. So when the zone keeps breaking through, it's no longer a valid zone. For now, we don't consider this zone here. This zone is still valid, and that up there is our new zone. All right, so we see a rejection here, and then we can enter for a sell. So 2 wins for now. It started going against us, but then this zone that was established previously held pretty well. And now looks like it's established. Also looks like I've missed it, but that's fine. We don't need to take every trade. So this is good here. Let's come down to our zones here very strongly and strong rejection. So we can actually buy here in this zone for a bounce, because this zone is confirmed and there's a potential for it to bounce. We have an edge. Doesn't mean it will work out, but it might. All right, maybe not in this case. So we do one loss. We just need to wait for a more clear zone. Okay, so it did bounce, but quite a bit lower. Sometimes you get these fake outs and there's nothing you can do. That's just how the price works. Sometimes it doesn't really react to the zone immediately. It goes further and then pulls back. Let's see if this zone holds. This is confirmed, but I don't see any signs of rejection. Remember, seeing signs of rejection and changing momentum is very critical. Nothing there. So nothing through these zones. Now this is interesting. This is another zone right above where you've seen signs of rejection. But we need the zone to be confirmed twice. And now this is the confirmation, but we're not entering, because unless it pulls down, pulls below, shows a bounce, this level is still not confirmed, as you can see. All right, looks like we're entering a trend, and it's no longer a zone that we can draw since it's not confirmed. This looks more like a zone in a trending formation, since we had a bounce from there and then comes back up and bounces again. So this zone is confirmed. If it comes back to that, we can utilize it. Okay, so now this zone is confirmed. And it's broken through. So if it comes back here, we can go for a bounce. Quite a momentum here in this move. Okay, good drop all the way here. Now let's see if we have a change in momentum. Yes, we do. And then we can buy this down here, stop loss below, and then take profit. So I'm just gonna explain something here. Sometimes when there's a strong momentum, you don't get a wick before price moves. Like this candle has no wick. Sometimes there's a very long wick before price moves, and that gives you a better entry. That really comes with experience to choose where to enter. For now, we just enter at open of new daily candle. Simpler that way, but you can experiment with that yourselves. See how many trades we've done. 1, 2, 3, 4. Another rejection. I like that for another entry. This is a clear rejection of this zone, but it's quite far from this zone. You can do another entry here. Okay, it barely hits stop loss. Idea still holds. You're still within this zone. And so this zone is confirmed twice. We just entered a little bit early. Should have shown more patience. But this is also good entry. Changing direction, show a strong bullish momentum off of this level. Let's see how it goes. Alright, stop out here. Now this level has failed twice, so we no longer enter here. So we've done 4 plus 2, 6 trades yet. It looks like it's making higher lows and possibly it's gonna break. Or not. That's the thing about price, you never know. That's why we can only focus on simple edges. Okay, we've got a bounce here, second bounce there. So we have a zone here as well. And again, it's reacting to this level. So we simply enter here again. Okay, that was just barely, barely missed that one. We have another established zone here, just below the previous one. So this area is quite crowded now. We just wait for the price to move to a cleaner area. All right, we have a test of this high. We can sell here. This one's a winner, even though it went against us, just went for a double top. So So how many trades don't fall now? 1, 2, 3, 4, 5, 6, 7, 8. We got 2 more trades. Sorry, I didn't sell at this candle. Reason being, even though it's a retest, it's already failed to push down one time. The edge is much lower now that it more likely a break since it's failed to go down once and twice now. Okay, looks like we've finally broken out of this. We have a zone here. It's reacting to, obviously. Question is whether we're gonna bounce or not. But it's the second time. That's just confirmed the zone. Third time. So once tried to break, came down. Second tried to break, came down. So this is our third test of the zone, and that would give us the entry. Okay, so that's also a winner. One more to go. Wow, it's quite momentum. That's exactly why I said you need to wait to see signs of rejection before you enter. Just because there is a zone doesn't mean price is gonna respect it. We need to see a change in behavior. We have a pretty big monthly zone here, and yep, pretty big. Got a week, it's already gone. We'll leave that be. Comes back again, bounces up again. I like this for a buy. Reason being, it's failed twice, but I'm not quite sure if we can manage. Alright, let's see what happens. It's pretty big. It's kind of huge, but the candles recently it's been huge. See what happens. Yep. Okay. That's also a win. Just what I'm saying. You never know what happens in the market. You can never predict where the price is gonna go. So you just need to focus on finding an edge and applying that over and over and over on a large sample, and then we can become profitable. Now over 10 trades, say we had 1, 2, 3, 4, 5, 6 winners. We got 6 winners, 4 losers. Right, and that gives you 60% wins, and the total profit and loss, that would be 6R, whatever your risk is, can be $10, $100, $1,000, up to you, and 4R, and you end up with 2R. Now this is over a period of 6 months. Now obviously you might say that 2R profit is not much over 6 months, and you're right. This is something that needs to be applied over multiple pairs at the same time, not a single pair, right? So sometimes you get more zones that react better on some pairs, and like in this case you don't get that much. Like in this case, this was pretty trendy, and this was pretty trendy. So yeah, this is the simple bounce off support and resistance zones strategy. It's very easy to apply. You just need to develop a clean eye for it. Focus on clean zones, and once it gets messy like that, don't try to force a zone. Just stay away, wait for the price to move somewhere cleaner. I hope you guys enjoyed this video, and in future I'm gonna create another video, show you my current strategy, which is adaptation of this, but it's more profitable and it's more refined to my own personality. Thank you guys for listening. If you like this video, give a thumbs up and subscribes. I also have live trading videos following my strategy and a couple of other strategy I'm testing. Please go ahead and watch those and leave comments. If you like me to cover something, let me know. And I wish you guys all the best, and Hope you guys to be always consistently profitable. Cheers.